Hi there, Travis here. It is tax time right now, and everyone's looking at ways of saving money in taxes. And for 2020, that ship has sailed, and so it's pretty tough to do anything now in terms of planning. But 2021, we can make some changes, and so this is a strategy that works great for self-incorporated folks, doctors, lawyers, realtors, accountants. And it also works well for small business owners. So you've got a small business operating company, and then you've got a holding company where you've got some investments and they're earning investment income. So this is a great strategy for that. It's a way of donating to a charity. So charities right now need our money. They are struggling. They're not able to have events, like fundraising events. And so this is a great way to help out your charity as well as reduce your tax bill. I'll say this as well, registered charities. So if you're donating to charities through this type of strategy, you want to make sure it's a registered charity or it's not going to work. I will also say, people ask, I've got a corporation, should I donate personally or through the corporation? The government tries to really keep things aligned. So $1 you earn in the corporation, eventually to get your hand, you're going to pay the same taxes, pretty close. They're always changing it, but it's pretty close. But what I found is more people keep money in the holding company and not personally. So when they're going to do a donation, it's often easier to do it out of their company. And I would do it out of probably the holding company versus the operating company. Holding company income is taxed at a higher rate, whereas your operating company is any income you're earning is taxed at a lower rate. So without ado, let's get into the strategy. So the strategy is donating a stock that's done very well in kind directly to the charity. And so why do this versus selling a stock or just taking cash? Well, if you're to sell a stock, eventually you're going to pay some taxes. So right now, $50,000 market value, you paid $10,000, let's assume, for the stock. It's done really well. Well, that's going to be $10,000 in taxes you're going to pay in your holding company. You're going to get a $25,000 credit for donating this money to the charity, and that's going to leave your total cost, $50,000 donation, $35,000 in costs. If you're to donate this stock directly to the charity, so $50,000 stock donated directly, it cost you originally $10,000, there's no tax, and you get a $25,000 credit. So you got double your money basically. It's going to cost you $25,000 by the time you get the tax rebates back, and the charity gets $50,000. What a great win. Here's the real kicker. It's called this capital dividend account. And so this is money that you can take out of your corporation tax-free. And so if you sell a stock with this big a gain, you only get $20,000 you can take out tax-free. But if you donate it, you get the full 40. And so this is huge. This is a big deal. So that is the strategy. This also works if you don't have a holding company, but you've got a stock that's gone up a lot in value and you're an individual. You can donate it directly to the charity and you'll save the taxes there. Reach out to me if you want more information. You can find me on LinkedIn, on Facebook, and on Instagram. Follow my pages. I've got more of these videos that are coming out. I got a great quote for you. Many of life's failures are people who did not realize how close they were to success, and then they gave up. So if you're struggling out there, keep your head up. Have a great day.